April 9th has been the single biggest jump in prices on an intraday basis all year. So it's the best trading day of the year. If you did not participate that day, your return is 4% year to date as of like last week. If you did, so if you basically stay fully invested in the market since the beginning of the year, your return's 14%. One day, 10 percentage point difference.
That's crazy.
Crazy.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Not long ago, Pompliano was the crazy Bitcoin guy on financial TV. Hosts mocked him, laughed at the idea of digital money replacing gold or challenging fiat systems. But over time, something changed. First came cautious skepticism, then curiosity. Now, acceptance. Big names like Paul Tudor Jones, Ken Griffin, and Larry Fink, once dismissive of crypto, are publicly embracing Bitcoin as a serious asset. The narrative has flipped. Bitcoin isn't the contrarian bet anymore. It's becoming the consensus trade.
They finally realized what Bitcoiners and gold bugs have been yelling about for 15 years is governments around the world were given a money printer. When they were given that money printer, they were trusted to be responsible with it. And instead of not violating that trust, they decided to just press the button as much as they possibly could. And as they've printed more money and they have devalued the fiat currency, the rest of the world at first was like, this is amazing. Stocks are going up, real estate's going up, I'm getting richer. But now people are saying, wait a second here. I actually think that I'm not driving real wealth. So opening bells, Phil Rosen, he came out and he showed the S&P 500 since 2020 is up 100%. Great, fantastic. Congratulations to all the stock owners. Priced in Bitcoin is down 90%. So what is your reference point? If you're measuring it against dollars, then you think you're a genius. If you're measuring it against a finite asset that cannot be printed and cannot be debased, you're losing horribly. And so it's all about that reference point, that denominator, right? The idea of a Bitcoin is the hurdle rate. And so I think that now you're starting to see this seep all around the world. Now, what I will say is Bitcoin versus gold is also a very interesting story. Gold is up 50% year to date. Congratulations to all the gold holders, right? Gold bugs, you guys were right, but not so fast. If you go back and you look a year ago, then gold is still up 50% because it pretty much was sideways for like a decade. So it has had this rapid appreciation. What we know though is gold accelerates before Bitcoin many times. And Bitcoin, if you go back over the last year, it is up it's up 100%. So over the year to date, you have gold up 50, Bitcoin only up 35. Okay, gold's winning. Over a year though, you have gold up 50, Bitcoin up 100, Bitcoin winning. If you go back 5 years, oh boy, gold's up 100%, Bitcoin is up 1,000%, 10x what gold has done. So both of them have a place in somebody's portfolio, I think. But if you're looking for the asymmetry, people are going to flow to Bitcoin. And what I think you're seeing now is the thing that the individuals have been yelling about on the internet, debasement, inflation, currency manipulation, loss of purchasing power, all that stuff. Now the institutions are saying, wait a second, we agree. We're going to lend our institutional credibility to this. Now it's being called the debasement trade, right? Like they invented this new phrase that no one's ever come up with before. No one's ever thought to buy Bitcoin and gold. And Charlie Bolello, Creative Planning, he came out and he showed that gold and Bitcoin, number one and number two assets. Never before has that happened, where gold and Bitcoin have been the two best performing assets globally. And it's because people realize they are never, ever, ever going to stop printing money. And therefore, non-productive assets are outperforming productive assets. So what does that tell you about the performance of the productive assets? It's all devaluation of the currency. And I think that's why you're going to start to see so much more capital continue to go. I think that this bull market is just warming up, baby. We're on the on-deck circle. Game hasn't even started yet. BlackRock is a Bitcoin company. They're the most successful Bitcoin company in the world. And people can get upset about that. They can not like it, but it's true. If your most profitable product is a Bitcoin product, you're a Bitcoin company, right? Guess what all of their financial advisors, guess what their distribution partners are all doing? They're going and they're spreading the gospel of Bitcoin. They're telling people, here's how it works. Here's why it's important. Here's why you should have it in your portfolio. BlackRock may be doing more for Bitcoin than companies that are solely Bitcoin companies. Again, you need everyone. You need the BlackRocks, you need the Coinbases, you need the hardcore Bitcoin maximalist companies, and you need the individual node operators. Everyone's on the same team. They may have different tactics. They may not think that they're working together, but that's the beauty of Bitcoin, is that there's no centralized coordination, but everyone's on the same team. They're on Team Orange. And BlackRock is a Bitcoin company. You can say they're not. You can pretend they're not. They can pretend they're not. They're a Bitcoin company. It's the most profitable product. Guess what? If BlackRock became a Bitcoin company, everyone else is like, I'll become a Bitcoin company. If I can have a really profitable product like the Bitcoin ETF, like sign me up, right? And so I think that's what you're starting to see, is that people are realizing, wait a second, this asset is not going away. I see it when I go on TV all the time, right? When I go on TV, it used to be, they would laugh. They would literally like, oh, here comes like the whipping boy, right? Like, oh, let's just pummel this guy. This guy's a moron, right? And we're going to make him look stupid. And I'd sit there and I'd say, you know what? Well, I disagree. This is what I think is going to happen, blah, 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 whatever. And was I 100% right all the time on timelines, all this stuff? No, of course not. I'm human. But directionally, like, I mean, you want to argue with me? I was on TV at $3,000 telling you things going up. It's not on 25,000. Like, I think, we could check that box, right? Now, then it went to, they were cautiously skeptical. They said, yeah, I don't know about this thing, but yeah, I see some people buying it. It went up in price a little bit. Let's see what happens here. Now, you go on, they just kick their feet up. They're like, let's watch the show, right? They realize this thing's not going away. Paul Tudor Jones, Ken Griffin, Larry Fink, they're all talking about it. They all are telling you the same thing. So unless you think now that you are smarter than the masses, and you think you're smarter than the best investors in the world, and you think you're smarter than BlackRock, and you think you're smarter than name any other big financial institution, get on the train. So now what's happened is Bitcoin has transitioned from contrarian trade to a consensus trade. And if you're not on the Bitcoin train, you're the one who's actually the outlier. You're the black sheep. You're the one who everyone's looking at saying, that person might not be that smart. And that's a big shift that's happened over the last decade or so. And I think that it's only going to continue. And eventually people are just going to think of Bitcoin as every other asset. Of course, it's got a place in a portfolio.
Investing in traditional assets is complex. Stocks depend on management, products, interest rates, and market cycles. You have to follow news, balance sheets, competition, and still, you can lose. Bitcoin is the opposite. It's simplicity codified. It's a savings technology, not a speculative gamble. You don't have to track earnings calls or political shifts. You save in an asset that no one can print, alter, or dilute. Through wars, pandemics, inflation, deflation, and market chaos, Bitcoin's protocol remains unchanged. The miners keep mining, the nodes keep validating, and the network keeps ticking. It's the most reliable constant in an unpredictable financial world.
They don't want to tell people to say, hey, actually, you know what? We think that this should be 10% or 20%. I forget who it is. There's some big institution that now has come out and said, actually, we think it should be 60% stocks, 20% bonds, 20% gold. Again, they're scared. They don't want to say Bitcoin, right? It's on the fringe. It's not quite there yet. But what do you think the individuals are doing? I don't know a single person, by the way, who is an individual on the internet who's got 1% allocation. Bitcoin is like, I believe or I don't.
Even if they put in 1%, it grew.
Of course, right? By the way, in the last year, it doubled. So now you're at 2%, right? It's like, I don't know anyone who's got 1% allocation to Bitcoin. It sounds good. People used to ask me, what should you do? And like, it was the like cover your ass thing, right? Like, oh, 1%, 1%, 1%. Rick Edelman saying 40%, right? Well, shit, if the Hall of Fame financial advisor can say 40%, I don't know if it's 40%, 10%, it's a bigger number than 1.
Yeah.
And, I used to go around and back in like 2018 or something, I started saying, get off zero, get off zero, get off zero, right? And it was the way of just saying like, I don't know what the right number is, but I know 0 is the wrong number. Well, guess what? Now the number is not 1. Because 1% is not going to do it for you. It's not going to actually save you. It's not going to go ahead and see it. And so I know like there's one hedge fund manager I know who's had a very storied career in finance. He now manages a hedge fund himself. And he's got 20%.
He got rich and then now he's...
when I go to lunch with him, we go to a nice restaurant. So yeah, he's cool. He's nice, rich probably. But he's got 20% gold in Bitcoin, 15% gold, 5% Bitcoin. And I've been giving him a hard time for like a year and a half, 2 years. I'm like, hey, why don't you, shift these, like put some more Bitcoin. Gold's up 50% this year. Bitcoin's only up 33. He's running circles around me saying, look at this. So again, I like Bitcoin much more than I like gold, but I think both have a good spot. So come back to, for a second, these guys talk about the debasement trade. What else are you going to buy? That's the whole point. What else are you going to buy? The stock market is up 100% since 2020. It is down 90% denominated in Bitcoin. If you are a stock investor, you have lost purchasing power when measured against a finite asset that cannot be debased. Housing? Stop it. Forget about it. Even worse, right? Go through any asset. They have all fallen at the feet of Bitcoin. Bitcoin is not only the apex predator, it is the king of finance. It is the hurdle rate. And that's why I keep saying, if you can't beat it, you got to buy it. It's the ultimate hurdle rate. So are there people who are outperforming Bitcoin? 100%. Are any of the large hedge funds outperforming Bitcoin? Probably not. Probably not. Especially if you add, 3 to 5 year time performance. So you start to say to yourself, again, that doesn't mean that somebody should go put 100% of their money in Bitcoin. It just means that if that's the hurdle rate, then you got to own the hurdle rate. You got to own the market. That is the new market. Owning the S&P 500, productive assets are getting trounced by a non-productive asset, whether it's gold or Bitcoin. So the whole idea of owning the productive asset is crazy. The other part that I think people drastically underestimate about the importance of Bitcoin, it's simple. If I said to you right now, you got to go buy NVIDIA. Okay, great. Let's just say that you are somebody who doesn't think for themselves and you just say, Anthony said buy NVIDIA. I didn't say that, but just say that I did say that, right? And you went and you bought it. Now you're holding NVIDIA. Now you got to pay attention. Is NVIDIA stock going to go up or down? What customers are they going to do? What products are they coming out? What about the competitive competitive dynamics of other people creating chips? Oh, wait a second. OpenAI, we put $100 billion and now they're going and doing a deal with AMD, right? Oh, did Jensen say something on the earnings call or not? Oh, wait a second. Interest rate. This is chaos. If you're a school teacher, a fireman, a police officer, a small business owner, or somebody anywhere in this country that does not do finance as a profession, how do you have time? Oh, and by the way, your financial advisor is telling you to have 30 stocks. So how do you keep track of all that? It's hard. It's complex. It's difficult. With Bitcoin or gold, but Bitcoin, you save in an asset that cannot be printed by anyone. Savings technology. All of a sudden, I don't have to worry about any of that stuff. Think of how crazy the world has been for the last decade. We've had wars. We've had printing of money. We've had pandemics. We've had more printing of money. We've had all kinds of public health crisis. We've had change of governments. We've had people arrested. We've had all sorts of socioeconomic problems. We have economic booms. We've had economic pull downs. We've had printing of money. We've had deflation. We've had the market go up, the market go, all that stuff. You know what's never changed? Bitcoin. Miners, node operators, software developers, block after block. Doesn't accelerate, doesn't slow down. Bitcoin is Bitcoin. It is the signal among all the noise. Name a company that has had no changes to it since a decade ago. You can't. They all changed. Sometimes the leadership changes. Sometimes the products change. Sometimes the competition changes. Sometimes the market conditions change. Sometimes the customers change. All that stuff changes. The simplicity of Bitcoin is simply save in Bitcoin. And I think that is ultimately why there are so many Bitcoiners around the world who have done so well, is because it takes timeless investing principles. Buy a great asset, hold it forever. Dead simple. It is codified into Bitcoin. The narrative, the ethos, the values of Bitcoin, everything is just save in Bitcoin. And Bitcoin then takes care of the rest. And that is incredibly empowering for a lot of people around the world. If you did not participate in the market on April 9th, April 9th has been the single biggest jump in prices on an intraday basis all year. So it's the best trading day of the year. If you did not participate that day, your return is 4% year to date as of like last week. If you did, so if you basically stay fully invested in the market since the beginning of the year, your return's 14%. One day, 10 percentage point difference.
That's crazy.
Crazy. Stop trying to outsmart the market. Again, if you prepare for the downside and you're willing to hold your portfolio through the storm, you can enjoy the good stuff. You want to hear a great story?
Let's hear it.
There's this adage that I recently came across. But as investors, you have a responsibility to go spread the word and explain to people you have to become an investor. You can't be a saver in this economy because they are going to keep printing money and punishing people. So help people, get them onto the life raft, get them onto the boat. Tell them you have to become an investor. I don't care if you start with $5 in the S&P 500 You got to start becoming an investor because that's the only way you can protect yourself. I believe that Bitcoin is the most resilient asset in financial markets, right? I think gold is also very resilient, but I think Bitcoin is the most resilient. And so by buying Bitcoin, I have a mentality. The only time that I can remember in any recent history that I've had to sell Bitcoin was because I had to go and pay taxes, right? But outside of that, I'm not selling the Bitcoin. Like if a dollar goes in, I don't want to come back out, right? Now, are there things where if I own the ETF or whatever, I'm talking about like actual Bitcoin, right? I look at it and just say that is something I want to hold for a very long time. And so having the savings account of Bitcoin is very different than like a trading position of Bitcoin, right? But that savings is just, it doesn't matter if it goes up, down, sideways, whatever. I think I've said how many times, right? The actual Bitcoin that I own, I want to give it to my grandkids. Just give it to them. And whatever happens between now and then, guess what? They're going to get Bitcoin. I don't know if it's going to be worth anything, but they're going to get it. Maybe it's going to be worth a lot. Maybe it's going to be worth a little. Like, let's find out. And that's how a market gets made.
Pompliano ends with a call to action. He says every person today must become an investor because being just a saver means being punished by inflation. You can't keep your wealth in cash while governments keep printing. You need to own assets that protect you from that erosion. And among all the assets available, Bitcoin stands apart as the most resilient. It's not just an investment. It's a lifeboat in an ocean of devaluing currencies.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.